In this video we are going to talk about Bank of America stocks. So before starting this video, please like this video and subscribe to our channel for future updates. We'll utilize hedge fund sentiment to assess whether Bank of America Corporation is a decent investment right now in this video. Before performing days of in-depth study, we like to assess hedge fund sentiment. We do so because hedge funds and other wealthy investors employ or consult with a large number of Ivy League graduates, professional network advisors, and supply chain experts. There is no lack of news stories about unsuccessful hedge fund investments, and while it is true that hedge funds' recommendations do not always beat the market, their consensus recommendations have historically fared well and exceeded the market after risk is taken into account. Hedge fund opinion has recently shifted against Bank of America Corporation, NYSE, BAC. At the end of the first quarter of 2021, Bank of America Corporation, NYSE, BAC, was in 97 hedge funds portfolios. This statistic has reached an all-time high of 139. At the end of the fourth quarter, our database contained 99 hedge funds with BAC positions. BAC ranks 24th among the 30 most popular stocks among hedge funds. Why should we care about hedge fund opinion at all? Since March 2017, a limited group of hedge fund holdings has outperformed the S&P 500 ETFs by 115 percentage points, according to our study. As a result, we believe hedge fund sentiment is a valuable indication that investors should monitor. When it comes to finding the next big investment opportunity, we don't leave any stone untouched. Advertising technology, for example, is one of the fastest growing areas right now. Therefore we're looking into stock presentations like this under the radar ad tech firm that might generate 10x returns. Even though we only propose positions in a small percentage of the firms we research, we look at as many as we can. We read hedge fund investor letters and attend hedge fund conferences to hear stock proposals. With this in mind, let's take a look at recent hedge fund activity involving Bank of America Corporation, NYSE, BAC. Do hedge funds think BAC is a good stock to buy now? A total of 97 hedge funds were bullish on this stock at the end of the first quarter, down 2% from the previous quarter. So, let's see which hedge funds were among the stock's top holders and which hedge funds were making significant moves. Berkshire Hathaway held the largest stake in Bank of America Corporation, NYSE, BAC, with $39,080.8 million worth of stock at the end of December. Viking Global came in second with a $1,211.5 million investment. GQG Partners, Diamond Hill Capital, and Pzena Investment Management are among the other bullish investors in the company. Aquamarine Capital Management allocated the most weight to Bank of America Corporation, NYSE, BAC, around 15.52% of its 13F portfolio, in terms of portfolio weights assigned to each position. Berkshire Hathaway is also a big fan of the stock, allocating 14.45% of its 13F equity portfolio to the company. Because the aggregate hedge fund industry's interest in Bank of America Corporation, NYSE, BAC, has dwindled, it's safe to assume that a certain tier of money managers decided to sell off their entire holdings by the end of the first quarter. It's worth noting that Steadfast Capital Management, led by Robert Pitts, sold the largest stake of the upper crust of funds, totaling $194 million in stock. Marcio Apple's fund, Atom Capital, also said goodbye to its stock, about $119.8 million worth. These bearish behaviors are intriguing to say the least, as total hedge fund interest was cut by 2 funds by the end of the first quarter. Let's check out hedge fund activity in other stocks, not necessarily in the same industry as Bank of America Corporation, NYSE, BAC, but similarly valued. We will take a look at the Procter & Gamble Company, NYSE, PG, Nvidia Corporation, NASDAQ, NVDA, The Home Depot, Inc., NYSE, HD, PayPal Holdings Inc., NASDAQ, PYPL, Intel Corporation, NASDAQ, INTC, ASML Holding NV, NASDAQ, ASML, and Comcast Corporation, NASDAQ, CMCSA, NASDAQ, CMCSA. This collection of stocks' market values are similar to BAC's market value. As you can see, these stocks had an average of 81 hedge funds with bullish positions, and the average amount invested in these stocks was $7,861 million. In the instance of BAC, that sum was $45,321 million. The most popular stock in this table is PayPal Holdings Inc., Nasdaq, PYPL. ASML Holding NV, Nasdaq. ASML, on the other side, is the least popular, with only 35 positive hedge fund positions. Hedge fund interest in Bank of America Corporation, NYSE, BAC, is above average, despite the fact that it is not the most popular stock in the group. BAC has a 52.6 total hedge fund sentiment score. Stocks with a higher number of hedge fund positions, both in comparison to other stocks and in comparison to their historical range, have a higher sentiment score. According to our calculations, hedge funds' top 5 most popular stocks returned 95.8% in 2019 and 2020, outperforming the S&P 500 ETF, SPY, by 40 percentage points. These stocks rose 17.2% from June 11 to June 11, beating the market by 3.3 percentage points. Hedge funds were also correct in their bets on BAC, as the stock has returned 8.6% since the end of Q1, through 6/11ths, outperforming the market. For their relative bullishness, hedge funds were rewarded. Valuation. Bank of America's present price-earnings ratio is roughly 21x, while its expected forward P/E based on 2021 earnings is just about 15x. Meanwhile, according to Barini Associates, which was mentioned in the Wall Street Journal, the expected forward P/E ratio for the S&P 500 index as a whole is 23.49. While bank stocks aren't known for having high P/E ratios, this puts Bank of America's shares at a 36% discount to the S&P 500's forward P/E ratio. With the bank's fortunes clearly turning around, this could be a good time to buy for long-term value investors. Dividend yield. If you're looking for a dividend-paying investment, Bank of America should be on your radar. The S&P 500 index was yielding 1.47% on March 31st, but Bank of America is currently paying 1.80%. That may not seem like much, but in today's low dividend environment, it's a 22% boost over the S&P 500's yield. During the financial crisis of 2007-08, the company struggled and had to reduce its quarterly dividend to just 1 cent per share for the payment on March 27, 2009. Since then, the quarterly dividend has increased by a factor of 18 to 18 cents per share. Catalysts for growth. The economy was battered by the coronavirus epidemic in 2020, after years of low interest rates. Bank of America's loan division, which is how banks make money, was crushed by this 1-2 punch. A bank's traditional function is to collect money deposited by customers and lend it to borrowers. Banks profit on the difference between the low interest rates they pay depositors and the higher rates borrowers pay. In a low interest rate environment, however, the difference between short and long-term interest rates is minimal. When the epidemic shut down most enterprises, lending activity dried up as well, creating a dreadful situation for banks. The good news is that things are gradually returning to normal for Bank of America. More cities and towns are opening up as a result of widespread vaccine distribution, implying that enterprises will require cash once more. The government has showered consumers and businesses with stimulus money, which has already pushed longer-term borrowing rates up. In the meantime, the Federal Reserve has stated that short-term interest rates will remain low for the foreseeable future. When you add it all up, Bank of America suddenly has some huge catalysts on its side. Is Bank of America stock a good investment? While investors would have preferred to buy Bank of America stock when Buffett was loading up in midsummer 2020, the stock appears to still have room to run. Bank of America's above-average dividend yield and attractive valuation are already reasons to consider it, but other factors appear to be supporting the stock's long-term growth. The slow recovery from the coronavirus outbreak in the United States should boost consumer and business spending, and a growing economy usually means more loan activity. In this scenario, interest rate spreads are also likely to widen, which is a positive for banks as a whole. To top it off, one of the world's most successful investors owns 12% of Bank of America's outstanding shares, indicating that those who buy the stock now will be in good company. Just make sure to check with your financial advisor to see if buying Bank of America stock is a good fit for your investment goals and risk tolerance. What are your thoughts on our video? Please let us know in the comment section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.